What's going on, tycoons? Welcome to the first stock research episode on our Black Tycoon Talk YouTube video, where we talk about everything financial literacy, money management, and stock market investing. Yours truly, your host, Godfred Buffy, and today we're going to have a field day. This is going to be a crazy episode, okay, because we are talking about the most sought after stock on planet Earth, and that is NVIDIA. So we're going to cover some stock research on NVIDIA. Specifically, the ticker symbol, as you can see on your screen, is NVDA. And this is really a special company because they just reported the Q1 earnings, and some of the highlights for the year-over-year changes is mind-boggling, okay? The first thing is that the net profit from Q1 increased by 628%, right? So the net profit was $14.9 billion that they kept, right? Which is insane year over year. Revenue, however, was $26 billion. So think about it. They made a revenue of $26 billion, but they kept $14.9 billion as profit. This is really impressive, right? And from a revenue perspective, the stock, the revenue increased by 262%. And most of these sales really comes from their data centers. And data centers accounted for $22.6 billion out of their $26 billion of revenue, okay? And the company also did announce a dividend increase by 150%, which is insane also because they just announced that they're doing a 10-to-1 split, meaning each stock that is currently owned by investors would be split into 10 equal parts, right? So right now, a stock of NVIDIA is around $1,044, which is something I predicted way back in February and January in my video when I spoke about NVIDIA and I spoke about my top 10 holdings. That's why NVIDIA is really my number one stock that I've invested in. So I'm here to shed some light on this topic here and provide you some research. I'm not going to do the craziest deep dive because most of my audience and most of my followers are a little bit more, I would say, newer investors and new to the investing world. So I kind of want to help them figure out how to evaluate and analyze individual stocks a little bit without going too nitty gritty and heavily technical where it gets confusing for many beginners, right? But again, these are some of the highlights that this stock and company has had in Q1 of 2024. So let's begin. And before we dive in, I'd just like to lay out the agenda of this presentation and research. And so we're going to start off with just the company overview, right? Not everybody knows what NVIDIA does or how they even make money. So we'll touch on the background, how it came about a bit, some of their business model, the way they operate. And then we'll move on to fundamental analysis, which basically covers the company's actual financials, right? If you don't know how much a company makes, how much they spend, who they owe money to, what are their debt and financial responsibilities and obligations, how are they investing in innovation and advancement. If you don't know those things, you're actually not investing. You're speculating at that point because you won't know how the stock is going to perform, and you won't know whether you should keep it or not. All right. In full disclosure, I've been investing in NVIDIA for 10 years now. I love it. I have no issues with it. And you're going to see why everybody is talking about NVIDIA earnings. The whole stock market is riding on NVIDIA's performance. We're in an era of AI boom, huge technological advancement, and NVIDIA is really like the holy grail, right? The king on the hill by itself. And this presentation is going to help you understand why and whether you should maybe take advantage of it or maybe you might want to look at other things. All right, so we'll look at competitive analysis. How does NVIDIA stack against, some of its major competitors within the industry and space they function and operate in? And then I'll also provide my financial rating, what I think NVIDIA, where they stand at financially. So my ratings are always out of 5, right? So 5 out of 5 being the best. So you'll see how I go about that in this presentation and this stock research. Lastly, we'll kind of look at a little bit of technical analysis, not too crazy again. So we'll look at the stock performance versus its competition that I mentioned earlier, and we'll also look at the stock performance versus benchmarks, meaning say the S&P 500, Dow Jones Industrial Average, right, the NASDAQ Composite. These are the major indexes and indices that everybody compares their portfolio to. And in reality, over the long term, most people are not going to outperform it. Even the big firms and hedge funds do not perform better than these benchmarks. So it's going to be interesting to see how NVIDIA has performed against these guys over the last 10 years. Okay. And then lastly, I'll speak on my overall rating of the stock completely in a nutshell. So without further ado, let's begin. And if you haven't already, make sure you give us a thumbs up, you subscribe to the channel, turn your notification bell on, and feel free to let me know in the comments your thoughts, your opinion on this video. And also, if there's any other stock you would like me to do some research and deep dive on that I can share with the audience and everybody like this. Okay, cool. So let's roll. The first thing we're covering, like I said again, is the company's background, right? And this is a company that's been around for quite a bit of time. They're not new. Generally, it just takes a long time, right? Decades for companies to mature, and it takes generally additional time for the public and a lot of investors to really see the opportunity. And so NVIDIA Corporation was founded in 1993, and they're based in California, and Jensen Huang is the CEO and founder of this company, and he's just an incredible individual. If you've never seen him speak, check out his keynote. Check out some of his presentations when he unveils new products on YouTube. Check out documentations. Very special individual, such a beast. And they operate in the technology sector. So you're dealing with, artificial intelligence, computing power, software, hardware, right? Cloud, AI. And initially they were known for their GPUs, right? Their graphics processing unit. And the company really started off more in the gaming industry. So what these they do with these GPUs is, when you think about how graphics from games have advanced, and I speak about this in my NVIDIA video, which I'll link to this in the caption, and also I'll link to this video, and you can check it out as well. These guys, they make the graphics for gaming, right? For video games, both online, mobile, when you think about your PlayStation, your Xbox, all these incredible, beautiful visuals that you see, majority of that is really derived from NVIDIA GPU chips that companies use and developers use to create their gaming, right? And so they've expanded their scope over the decades, over the last 30 years, into like just high performing computing power. It's insane, right? They got data centers and a bunch of other areas that they operate in. And so that's a little bit of a background on NVIDIA. And the business model is interesting because most of your sales comes from the hardware, which is really the GPUs, right? The graphic processing units. And again, majority of the revenue comes from that. And this is from gaming, professional visualization, right? Data centers. These data centers are like big, massive warehouses. Think about it, right? All the information or the technologies that we all use and high computing power for high processing speed, all the things that me and you use daily that we don't even think about or care about. These guys are in large part responsible for the infrastructure of that and how these things operate so efficiently and effective for us. Okay. And then they're in automotive sector a little bit as well. And then they have systems and servers, which is insane, right? So they sell integrated systems and servers, for their data centers, AI research, right? High performance computing power applications. And then secondly is really the software and additional services. So they have a licensing technology related to the GPUs. So the architecture of other companies generating revenue from and they generate revenue from intellectual property. So companies can use their infrastructure and their architecture to build and develop their own models. And in this case, since many of us are familiar with, like, say, ChatGPT, when it comes to large language models, you need so much data and processing and space to really aggregate and work on all of these things and make sense of it, right? To where now the AI is effective the way that we benefit from. So, they license some of those out and make money off those intellectual properties and get residual income from the companies that they have partnerships with. They also have subscription services. So, like Omniverse and Clara may offer subscription models, right? And all of these go into their revenue streams and diversification. If you know anything about investing, the key is to have a good diversified portfolio. And as a company, it is really the same thing. You don't want to be a one-trick pony and only make money simply from just one product. All right. And then and lastly on that part, support and maintenance. Okay. Because they're the ones that create these software products. They're the ones that are also responsible for some of the maintenance pieces. And this adds another layer of revenue because they charge for maintenance, right? It's like if you buy a Toyota, every time you go to get your Toyota serviced or maintained, whether it's an oil change, whatever it is, you're paying for it, right? Maybe your insurance might be covering, say, tire, a few other things, but at the end of the day, it is being paid to Toyota, right? Whether it's from your pocket or from your insurance, which is technically your pocket, right? Because you pay insurance every month for your car. So that's another revenue stream that this company has within their business model. And then number 3 is they have insane amount of strategic partnerships and ecosystem. Okay. When you think about all the top 500 best companies on the planet, these guys have managed to infiltrate, they've managed to connect and build relationships with these firms where, because NVIDIA creates the best products in the space that they operate in, they have a huge leverage and pricing power. So they have a lot of collaboration with industry leaders and some of their biggest clients, right, and partnerships. I would say you're looking at the best companies on the planet, right? You got AWS, right? That's Amazon. You have Google Cloud. That's coming from Alphabet. Alphabet is the name of Google. And then you have Microsoft Azure, right? So Microsoft works with them. Meta works with them. And these top 5 companies are buying hundreds of millions and sometimes $billions, billions dollars worth of NVIDIA product, services, software, data centers, right? So think about what that looks like. It's crazy. And they're big. Also, they're a big developer of ecosystems in general. So they have a really robust ecosystem that they use to help provide so much value to companies, right? So when you think about research institutions, enterprise integrations, right, technology, AI, companies trying to become cost efficient, more effective, more productive, find ways to generate good money, create best products so they can remain competitive. NVIDIA gives them the opportunity to do exactly that. Okay. So that summarizes company background and NVIDIA's business model. All right. Now let's talk a little bit about competition, right? NVIDIA has been, for the most part, the lone shark, the apex predator alone in this environment for decades. Some of these companies also operate in the same environment, but theirs is not just as advanced or as robust as NVIDIA, right? And so NVIDIA is really the king on the throne, the apex predator in this space still to this day. And I expect that to continue for some years to come. Nonetheless, there is some competition that has come in play, right? And some of his main competitors in this environment is AMD, Alphabet, Qualcomm, and Broadcom, right? So NVIDIA makes chips, and all these companies also makes chips as well. So, NVIDIA is just an insane monster. But we'll talk about when we speak on, the stock price and performance versus NVIDIA stock price and performance versus its competitors. We will touch on how AMD, Alphabet, Qualcomm, and Broadcom are also operating within that same space. And you get to see for yourself. This is data that is accurate. It's not I didn't just make this data up. I'm looking at accurate sources, and I can link all that information below as well. So let's continue. These are some of the main competitors. Financial analysis, income statement. Okay. Every investor, if you want to do well, this is something you have to begin to get familiar with. Again, like I said, not everybody or people that follow my page are, I would say, your deepest, savviest investors that are willing to commit a lot of time, energy, and effort to the research process. So I've done my best to try and consolidate, aggregate, and simplify some of the major, most important pieces you need to look for and look out for when you're interested in an individual stock, especially one that everybody's talking about, right? Like NVIDIA is really the hottest one everybody's talking about, and that's going to continue for some time. All right. So from an income statement perspective, think about it. Every company has 4 main financial statements that investors must analyze, right? And I've analyzed NVIDIA's over the years. And so, normally you have your income statement, which another way of saying that is P&L, right? Profits and losses. And then you have your balance sheet. This is essentially looking at the company's assets, all of his liabilities, and the shareholder equity. essentially looking at the company's net worth or value overall, right? And then you also have statement of shareholder equity. That only focuses and analyzes shareholder equity, how that is increasing or decreasing year over year, how that shareholder equity value or the money is being utilized throughout the year, right? And so when the company pays dividends, that comes out of shareholder equity and is net profit, right? AKA it's free cash flow, because technically free cash flow belongs to investors, aka shareholders, and shareholder and improves the shareholder equity by retaining that profit or that free cash flow, right? But when it pays dividend, that free cash flow goes out of the company to investors. So that is recorded there. When companies do buybacks, right, when they buy back more shares of its own stock, some of that money, right, comes out of the retained earnings. Sometimes there's a bunch of little tricky, little neat things that goes on there, but I don't want to confuse or bore anybody. So that shareholder equity statement, which kind of shows the flow of resources over the years as companies are moving on. And then lastly, you have your cash flow statement, right? That shows exactly how the company is utilizing. It shows exactly where the money is coming from, like all the revenue streams are coming from, and also where all that money is going, right? So you have your inflows from your revenue streams, from your sales and all of that stuff, and then you have your outflows. So in that, you have operating activities, you have investing activities, and then you also have dang it, what is it? It's not coming to me right now. I want to say financing activities, but don't quote me on the third one just yet. But you have operating activities, investing activity, and financing activity. Yeah, it is. Okay. And operating activity is really all the money that comes in and the money that goes out to operate the business. Investing activities is when the companies are actually investing or they're moving money around to try and generate and invest in the business or grow the business, right? So, for example, if NVIDIA decided, okay, we're going to invest in research and development so we can try and create another product that is better than what we have right now, then guess what? NVIDIA is going to spend money to do that investing, and you will see that reflected in cash flow statement as an outflow of money going out. So it will be reflected as negative. Say they spent 10 billion. It will look like negative 10 billion, but it doesn't mean that they lost 10 billion. It means that they sent out 10 billion to do research and development. Okay. And then financing activity deals with a lot more with the company's debt borrowing structure, whether they're borrowing debt or raising funds or selling stock. Those type of things goes in that area. Okay, so that's the four main statements, financial statements. We're looking at one right now, which is income statement. This shows us how the company makes money. If you don't know how a company makes money, you should not be investing in it, right? And so with NVIDIA, we can look at the revenue, which is the top left chart that we see. And over the years, and I try to look at it from like a 10-year perspective, right? So in this case, we're looking at it from a 9-year perspective. But from 2015 all the way to 2024, you can see that NVIDIA's revenue has grown significantly over the years. Okay, and that is not by accident. That is by design, because they really are the apex predator, and they know they're so valuable and so dependent on by technology and society that, you know, it's no surprising that they're hitting some incredible revenue marks in recent years, right? So the way NVIDIA's fiscal year is set up is not set up like January 1 to the end of, you know, to December 31st, right? It's more like January 31st all the way through to the following year, January 31st, right? And so that is why you would notice in my bullet points here, it's like they're ahead by 1 year, so to speak, right? For lack of a better word. But you can see the revenue have gone up from 2015, roughly around $5 billion ish to 60 to $61 billion at the end of 2023, right? So where it says 2024 in that chart, right? When we look at it right here, it's technically not 2024 because we're in 2024 now. But because the year for the company ends July 1, 2024, it is reflected as 2024, right? So this is really, realistically, is really 2023, okay? Hopefully that didn't confuse anybody. But yeah, let's continue on that. So let's start with the bottom here, right? You can see year over year in recent years, right? In 2022, which is really 2021, the company's revenue was $26.9 billion, right? That's basically $27 billion. And that was the 61% increase from the year before that, right? 2020, if we really look at it. Okay. So, but let's just stick to what is on the screen right now and just go off it that way. But the numbers is the same. It's just that the year overlap a tiny bit, right? So 2022, in this case, was 26.9 billion, and that's a 61% increase from 2021, which is impressive, right? That's a massive gain. That's not common. And 2023, which is really 2022, they didn't really grow much in terms of revenue. It was very much similar, just a tiny little bit of growth, but there was a huge boost in 2023, right? In this case, it says 2024, but it really applies to the year of 2023. And that was an insane amount of growth, right? They more than doubled their revenue income, which is insane because if you think about it, 2023 was really the biggest year that the AI boom really kind of started before the pandemic, and then during the pandemic, right, it was highlighted even more. And then right after the pandemic, every company and every firm sees the real value there. And so there's more investment coming in. So everybody's buying these chips and products and data centers from NVIDIA. And so their revenue went to basically $61 billion, which is a 125% gain. That is powerful. A company that don't make money will be broke. And a company that don't make money, even if the stock price goes up, it will come down quickly, right? So we can see and verify that, hey, NVIDIA actually makes bank. These guys are caking, they're making money. And so there's no wonder why, from an income revenue coming in perspective, everybody and investors are excited about this stock. All right. When we look at the gross profit, which is really the revenue subtracted by what is spent to make that revenue. That's kind of how, from simple, I don't want to go into the financial jargon too heavy. So just for simple analysis sake, is kind of view it the same way as like your paycheck, right? You have your salary, right? And then everything don't view it as your paycheck because that's actually not applicable here. But think about it this way: revenue subtracted by cost of goods sold, right? What it costs the company to sell those goods, literally, is gross profit. And we can see that the gross profit is actually very healthy. When we look at that same type of timeline, we can see it increased much earlier, right? In 2021 to 2022, significant increase. And then 2023, which realistically is really 2022. Remember that. Not too much of a insane decline. It was a little bit flattish, 12%, not really flat, but compared to the gain the previous year, not too shabby, right? And then 2024, we've seen that they've more than doubled, almost tripled that gross profit, which is really good and impressive, right? So that's $44.3 billion. Insane. Okay. And then with NVIDIA, we have the operating income. And the operating income has also increased significantly. I mean, this company is making bank right now. They are caking. And net income is really what is left after all the expenses, all the deductions, all the taxes, if after everything goes out, what is left, right? It's like when you get paid after you pay all your bills, what is left? If you have nothing left, then you're in trouble, right? In NVIDIA's case, in 2023, they literally made $61 billion and they kept $30 billion. That is a net income of keeping half of what you make, right? Which is really impressive. And the 581% increase, which you see right here, right, from 2020, basically from 2023, is mind-boggling when you think about it. That is 5-fold. They're able to keep, compared to the year before, they kept 5 times as much as what they were able to keep before. So that's really a big life hack and a cheat code in life, is when you make money, you have to make sure that you can manage the resources well, keep your expenses low, keep your debt and liabilities low, and that way you can have more money and you can have more disposable income, aka free cash flow, which is what we see here as that $29.76 billion in the bottom right chart. And that is the key to winning financially, right? So we will look at a few other aspects regarding NVIDIA's balance sheet, and you will see why they do so well, because not only do they manage the resources well, they're able to keep it, invest and multiply it, but they also don't owe that much debt. Okay. And speaking of debt, let's move on to their balance sheet. Let me take a sip of water. All right, cool. So when it comes to the balance sheet, think of it as the company's net worth, or, in your case, think of it as your personal net worth. Okay. Assets, and the formula for balance sheet is really assets minus liabilities equals shareholder equity, right? So think about it. A company can have a complete total assets, and then once you subtract the liabilities, which is what the company owe to its lenders, the money that's remaining is shareholder equity. And that shareholder equity is literally investors' money, right? Think about it. If you own real estate and you have a mortgage, right? Let's say you took out a mortgage of $400,000 to buy a $400,000 house, right? That simply just means that the total asset is $400,000, okay? But your liability is also $400,000, meaning you, the person that took on the loan, actually has zero shareholder / investor equity because you haven't paid the debt down, right? Let's say you pay half of that mortgage. Now let's say the house value is still $400,000. That's the total asset. But your liabilities is $200,000 because of the mortgage that's remaining. But your equity, right? That's why when you buy a house, you build equity. That's what shareholder equity is. It's the same thing. Your equity in the house now is $200,000. So if you was to sell the house for $400,000, you will owe the bank $200,000. So you give them their $200,000, and then you keep $200,000. That $200,000 you keep is shareholder equity. In this case, when it comes to the stock market. Okay. So hopefully that brings it full circle. So you got the visual piece there. And then now we can talk about the actual numbers of how NVIDIA is doing this. So total current assets is really, so whenever you hear current asset, that is talking about short-term assets, meaning any asset that can quickly be turned into liquid cash and get the profits and proceeds from it within a year or less. Okay, so whenever you hear current asset, think a year or less. And for NVIDIA, the total current asset is massive. Okay, and this is billions. Okay, don't get it twisted. It looks like 45,000, but they don't include a million zeros after it because it would just be too much visually to look at. Okay, so this is billions. So you can see from 2015 all the way to 2024. In this case, really is 2023, right? So think about it. Like, don't forget about that part. That they have gone from basically roughly just shy of 7 billion in 2015, right? And that has increased. Look at this beautiful chart here. That has increased over time consistently to $45 billion of current assets, right? Very powerful. When you compare that to NVIDIA's current liabilities, remember, anytime you hear current, that is really anything that is a year or less, right? And so in this case, any financial obligation or financial responsibilities that NVIDIA has that they have to say make the payment, let's say they have to make the payment in less than a year or in a year at the most, that is what their current liability is. Now, that has also increased over time, right? So it's gone from, give and take, let's say 1 billion in 2015 all the way, or really 2014, all the way up to just shy of 12, just shy of like 11 billion, right underneath 11 billion. So that's in about what, 10.5 billion, give and take, which is impressive, right? Because the short-term assets is 45 billion, but the short-term liability is only about 10.5 billion. Very healthy, very attractive. Okay, that's what investors need to look for, because yes, you can be investing in something for the long term, but how are they doing short term wise? Can they handle their responsibilities? Can they pay their debt if things don't go well? If the industry doesn't perform well, or the stock market goes into a recession, the economy is in a recession, things are not good, how is the company going to perform, right? Let's say they're not making as much money because the market is messed up, everything is going south, and they're not making as much money. Can they survive? Can they weather the storm? That's what you're looking for when you go to look at a company's current assets versus current liabilities, right? That's very important. Do not forget that. Okay. Now let's talk about the company's long-term assets. That's basically any asset that can be utilized and get the proceeds and the investments from over a year, right? So whenever you hear long-term, think over 1 year. Okay. And we can see in the bottom left chart here that has also grown significantly, especially over since 2021, right? And it makes sense because when you think about it, we just went through COVID-19, and so the pandemic kind of sped up the advancement in technology and software because everybody can work remote. Some of us were working hybrid. Everything was just basically done remote. All right, so you can see how the pandemic, as dangerous and as difficult as it was for the world, it has allowed some companies to benefit greatly because of their business model. And in this case, NVIDIA has the perfect fit business model to take full advantage of such an environment, and so the total long-term asset has increased significantly over time. So they've gone from roughly about 2 to 3 billion in 2014, which shows here as 2015, but really 2014 all the way through to 2023 at over $20 billion in long-term asset. That's beautiful. Okay. And when you compare that to the long-term liabilities, right, the total long-term liabilities, again, whenever you hear long-term, anything above a year. So when you compare that to any debt obligation that the company has beyond a year, you can see that their total long-term assets is still higher, almost twice as high as the long-term debt liabilities or, credit obligations, right? Which at the end of 2023 is sitting around $12 billion. Okay. So how do we know what shareholder equity is, right? If you remember earlier, not too long ago, I did state that when it comes to the balance sheet, right, it's assets minus liabilities equals shareholder equity. Okay. And for NVIDIA, shareholder equity is actually closer to 50. It was closer to 45 billion by the time 2023 ended, right? Which is a beautiful thing because when you look at, if you add his current liabilities and his total liabilities together, right, is less than 30 billion. But if you add his total current assets, right, and his total long-term assets, we are looking at about give and take 80 billion, right? So 45, 20. No, we're looking at about 60 something billion and change. And there's a few other item lines on the balance sheet that it factors in, but I didn't focus on those. So in total, they're at the total, and we'll see it on the next slide in terms of my final analysis and review. And so the shareholder equity has increased over the years, which is a beautiful thing to see. As an investor, you want to see shareholder equity increase. Why? Because shareholder equity is the value that you own in the business. When you buy the stock, that is what you own. Earnings, when you hear earnings per share, that's what they're talking about. So the higher the shareholder equity is and the lower the debt is, the better, because it shows that the company is actually operating very, very efficiently, effectively, and maximizing their resources. That's why you see NVIDIA stock price going as crazy as it's going right now. And you've seen it going crazy over the years, right? If you remember 2023, the stock price finished at the end of the year like 230% up, something like that, 223% up. And that's because of these numbers, right? So when you look at these charts that we're looking at already, both from the previous slide, when you look at the 2024 numbers here, that's really 2023, right? And so when you see a company perform this well and this strong over 1 year, right? And it's not like it's just 1 year type of thing. You've seen it grow over the years, but it's really picked up steam or momentum in that 1 year. You can see why the stock price is going the way it's going. Okay. And already in 2024, like I mentioned in the beginning, they reported their earnings and they crushed it and they bodied it. And already you see the stock price is also climbing very, very fast throughout the year so far. And especially right after its earnings, it popped about 5 to 8% and they're doing incredible. Okay. So when it comes to overall financial rating, from a tycoon perspective, I'm looking at this company as 5 out of 5. And that's because of its income and profitability. A company that is not profitable will soon run into problems, right? Imagine the same thing with our personal life. If we don't make money, we don't profit, we're not gonna be able to pay bills. It's just a wrap, right? So if the company makes money, you need a company that can show a track record of making money consistently over the long term, and that's what NVIDIA has been showing us. And so we saw the total revenue of $60.9 billion in 2023, but they spent $31.2 billion, right? Which led to a net income, meaning what they kept, when we saw earlier, of $29.7 billion that was kept in their pocket. That's a huge green flag, right? In my opinion, this is really the most profitable stock and company in the world right now when it comes to some of these big companies, let's say the top 10 companies, okay? Because they're keeping nearly 50% of their revenue, right? From 2023, they literally kept nearly 50% of their revenue from 2023. Here I have it written as 2024 just to follow the same theme that the charts and everything is in, right? But think about it. When you hear 2024, it's really 2023 for NVIDIA because of their fiscal year, okay? So from a profitability standpoint, in my opinion, they're keeping 50% of what they make, all right? And the Q1 earnings that we just seen this week that just happened, they actually kept 57% of their revenue, right? And so when you look at NVIDIA, it's like this machine is incredible and it is growing, right? Though there's competition in the space, but it is still growing at a strong pace. And I don't anticipate the competitors catching up until like 2 to 3 years from now, where, you know, they might be able to gain a little bit more market share, might have products out there that might be a little bit more affordable for other companies or smaller companies. But I don't see NVIDIA slowing down no time soon, right? And think about it. Everybody's going to be adopting AI technology. They're going to be embracing it. It's going to make all our work a lot more effective and efficient. Some of us are going to lose jobs, and that's why it's important to invest, right? That's why it's important to do your research when you do invest, especially in individual stocks such as NVIDIA and other companies that are out there, right? The only way to win is to invest your money, and this company does the same thing. So profitability-wise, in my opinion, this is the best company on the planet in terms of their ability to generate income and profit and keep the money. And they keep in about close to 50%. And in Q1 of 2024, they kept, like I just said, 57% of all the revenues that they made. That's a beautiful thing. So I give that a huge green flag. In terms of his net worth from his balance sheet that we just looked at in the previous slide, total current asset is $44.3 billion, which is much higher than the total current liability. Remember, we spoke about that. You want your current assets to be much higher than the current liabilities. And that gives the company a current ratio of 4.1. Now, the best way to approach current ratio, generally, you want a company that has a current ratio of at least 2. Okay. If you don't know what current ratio means or the formula, it won't help you because you're like, okay, well, 2. What does 2 mean? Or in this case, what does 4.1 means? I'm going to tell you. All right. 4.1 basically means that the company can cover a current ratio of 4.1 means the company can pay its short-term debt obligations 4 times over. Right. So in this case, let's say all hell broke loose and NVIDIA has to pay all their short-term liabilities back to their lenders and creditors. Right. That means because NVIDIA has $44.3 billion and liability is $10 billion, right? They can pay like 4 times, right? So even if their current liability was $20 billion, they can pay 2 times, right? Think about it. That's how secure and safe that the company is financially in the short term. This is as healthy as you're going to get, right? How many people do you think if they had to settle all their debt, their short-term debt, right? Any debt that's owed within less than a year right now, if something happened, let's say no money was coming in, how many individuals and people do you think can pay that? Probably less than 0.5% of the population in the U.S. can say, hey, I could wake up today and settle all my debt, my short-term liabilities, right? This company is killing it when it comes to that front. So even if they don't make any single money, any dollar, and throughout 1 year or less than a year, if they had to pay this $10.6 billion, no problem. They can pay it and still have $33 billion remaining and still keep the company afloat, keep the company running. That's how you want to approach investing and looking at individual stocks, right? You look at the short term, you look at the midterm, you look at the long term, and then you make an educated guess on that. Okay. So next is their total long-term assets, which is $21.3 billion. and a total long-term liability of 12.1 billion. So aside from the short-term liabilities and short-term assets, which we just spoke about, when we look at even the long-term debt obligations and the long-term assets that they have, we can still see that this company can basically almost pay twice as much on their long-term liabilities, right? So generally, over time, current liabilities and long-term liabilities will go up over time. That is a natural part of any of the business landscape. That's natural, okay? Because sometimes it's smarter or better to use debt than use your own money, right? And because sometimes you use debt than using your own money, if it's done correctly, right, in a responsible manner, it actually enhances the overall company and its performance and the stock price. So, yeah. Anyway, companies with higher long-term assets than long-term liabilities are more valuable, right? Because that means they can handle their long-term challenges. They can make the payments. They can settle the debt if it comes to it. NVIDIA has almost twice as much long-term assets, almost twice as much long-term assets as their long-term liabilities. And this is very good and attractive. It gives investors such as me conviction, right? I can trust that in the short term, they can pay their debt and still have even more money over, and we're going to be comfortable. We're fine. In the long run, I can still trust them and be comfortable that they can pay their debt and still pay everything, and we're still going to be fine, right? So they can comfortably weather long-term financial challenges easily. Same with short-term financial challenges. And the total assets is really 65.7 billion in total, right? Which is 3 times as much as their total liabilities, right? So even if their total liabilities was double, they can still pay it and still have another $12 billion just vibing kind of thing, right? So that's how powerful this company really is when you look at the way they move about their financials, right? They're very safe. Very, very safe. Granted, yeah, the stock price is expensive, which is $1,000 a share. No, not everybody can afford it. But again, on June 7th of 2024, they had the stock split coming, a 10-for-1 stock split. So each share is going to end up being $100. And so maybe by then you might have watched this video. Hopefully, even if you watch it after and you see some value here and it's going to help you make a good investment decision, go ahead. But I'm certainly not telling you that by watching this video, go and buy NVIDIA and do anything of that nature. I'm simply explaining my research process, how I analyze these companies, and where it could be beneficial for other people that may not know what they're doing or may not have time to actually, or may not be curious about learning, doing the full-blown research, but a quick, 1-hour video or something like this will help them, kind of learn a thing or two about the equity markets and how businesses operate. Okay. Lastly, we have shareholder equity. Shareholder equity is 43 billion compared to 22 billion from its previous year, right? So think about it. Shareholder equity basically doubled. That's why the stock price is going up crazy, because shareholder equity us investors, we like what we're seeing from NVIDIA. Companies doing good financially. Business model is strong. They know how to make money. They know how to manage money. They know how to retain the profits that the company makes. And therefore, we as the investors benefit from it. That is why it is better to be an investor than just a consumer, okay? Because investors get paid when companies make money. If you don't work and if the only way you get paid is when you're working, that's a problem, because you're gonna work till you die, and you don't want that, right? So shareholder equity basically doubled year over year, and this is nice because again, they need to increase shareholder equity value. That's why you're investing in the company, right? So you can get value and your money can grow. So the company has to prove to you that it can grow your money. NVIDIA has been doing that at an exceptional rate at the highest level, more than any other company over the last 10 years, as we can see, right? 65% of its total assets is shareholder equity, which means that the company is not mainly funded with debt, right? So it's not like, oh my God, they just use debt that they owe back. A good part of some of it is funded with debt, but a good portion of it, I would say a bigger portion of it, is also funded with, say, shareholder equity, our invested money, right? And they've shown us that, hey, they can invest our money and basically grow it better than any other company out there right now, and so investors like it. We ain't going nowhere. I'm definitely not going nowhere. I'm long on NVIDIA. Okay. Again, retained earnings is important to investors because that shows us that our equity is growing, and that's followed with the stock price going up. Okay. So from a financial rating perspective, from the financial statements that we just looked at, right? Income statement, balance sheet. We didn't look at shareholder equity, statement of shareholder equity or statement of cash flows, because I don't want it to get too long, too confusing for everybody that's listening. Wanted to keep it on a high level and simplify and keep it interactive and fun. You know what I mean? So final rating financials wise is 5 out of 5. It is very hard to come up across companies that have 5 out of 5 financial ratings, in my opinion. In the entire world, I would say there might be, based on my research and what I've looked at, I would say there's definitely less than 10, and maybe at best around 5 or 6. Yeah, around 5 or 6 companies that I would categorize as 5 out of 5 financials. NVIDIA is one of them, and you can just see why. You know, we just covered a good amount of why I have them rated at 5 out of 5. Okay, let's talk about technicals a tad bit. And I know the screen looks very busy and looks like a lot going on, but trust me, it's very simple to follow. I'm going to explain it quickly. And so, gross profit margin. Remember, we spoke about how the company's making money in terms of, we talked about the gross profit itself. But gross profit margin is like, what is the percentage of that revenue, right? If you see a gross profit margin of 50 million, okay, is that good or bad? We don't know. If we don't know the revenue and we look at the gross profit, it doesn't help us. So we need to know what the revenue is. If revenue is 60 billion and gross profit is 50 billion, beautiful. We can see, okay, that's good. Out the gate, they're able to keep a lot out the gate, right? But what percent is that of the revenue, right? So 50% of, say, 60 billion is what? 50 billion, right, is what percentage of 60 billion, right? And so that is what the gross profit margin really analyzes and gives you. So when we compared NVIDIA to, I know it says SoFi here, but it's really NVIDIA that we're looking at. So when we compare NVIDIA gross profit margin to other competition, right, we can see, based on, we start with the top left chart, and NVIDIA is the blue straight line. AMD, which is Advanced Micro Devices, that is the orange dotted line. Alphabet, aka Google, is the green line. Qualcomm, which is another company that does similar work, and we have them as the pink dotted line. And Broadcom, same thing, another competitor, in the gray, right? If we look at let me go back. Hold on. Let me go back to where I just left off. My hand hit the key. Okay. Right. From Q4 2009 all the way till Q1 2024, right? We can see that NVIDIA, again, apex predator, king of the hill, 72.72% in gross profit margin, right? That's followed. Next is Broadcom, and then Google, and then Qualcomm, and AMD is last on here. So right out of the gate, when you compare NVIDIA to its competition, they are keeping a lot more out right from the top than all its competitors, right? And so to the right side here, we can see the net profit margin, which is basically, okay, that net profit, what they kept, what percent was kept from the revenue, right? And that's what we see here. And we can see, like I mentioned earlier, that's sitting around 48.85 billion, 48.85% out of the total revenue. So they're keeping almost half, right? The rest of these companies can't even keep 40%, right? They can barely keep 30. Broadcom is the closest. We're keeping almost 30. Google's about 25. Qualcomm 23. AMD is dead last on this. Intel is also another competitor, but I didn't include Intel because Intel is actually not doing well at all. So if I put them in here, it wouldn't even make sense. So I wanted to keep it more competitive and with stronger companies, right? So from the same timeline, Q4 2009 to Q1 2024, NVIDIA, again, is beating its competition when it comes to net profit margin. Return on equity. Remember I spoke about shareholder equity? Yes. Return on equity, basically, the formula measures how much is being returned to investors, right? From that whole shareholder equity pot, how much is being returned to investors. And we can see that over that same timeline, right? NVIDIA, again, king of the throne, 92.81% return on the shareholder equity to investors. We like that. Yeah, we like that, right? Qualcomm is 37. Broadcom is 33, Google is 29, AMD is dead butt, dead last with 2%. Is interesting. So we want to see, okay, as an investor, what is the return on my equity? What is the return on my investment? And what is the return on the company assets, right? And that's what we're looking at now. So in terms of return on investment, when NVIDIA makes investments into the business, into creating better products, research and development, acquisitions or partnerships, whatever investments that the company is making, what is the return on that for the company? And again, we see NVIDIA's cooking everybody else, right? We're looking at 80.7% compared to everybody else that's sitting around 31 and below percent. That is such a powerful indicator as to why NVIDIA is so much better than its competition. And then return on assets. That is the NVIDIA's total company assets altogether. What is the return on that, right? And we can see that's 55.65% for NVIDIA. And Google's then is the second place here, which is 20.74, right? So NVIDIA blows competition and everybody out the water when it comes to both financially and technicals, right? And now, right now, this is technically overall, you can say this is somewhat financial competitive analysis, but it's also technical because this is whenever you're looking at the charts and comparing the charts and so forth, you're looking at the technicals of that. And so I didn't want to make this too long and create a whole nother financial thing that's for each of these competitors, right? Because the gross profit margin, net profit margin, return on equity, return on investment, return on assets aligns with the income statement, right? And aligns with the balance sheet. So we looked at NVIDIA's version of that, but NVIDIA's version boils down into what we see here from a technical chart perspective. And so all those other companies, theirs will do the same thing. And so this is a perfect comparison to kind of simplify and consolidate everything, okay? So what does that result in when it comes to comparing NVIDIA to, let me move my face up so you guys can see the chart there. When it comes to technical analysis of stock performance of NVIDIA, I know it says SoFi, it is not SoFi, of NVIDIA versus competition and benchmarks, okay? How has the stock performed? So based on that previous slide we saw of NVIDIA versus competition, we can see why, because it's doing much better than its competition, the stock price is also performing better. All right, so these are all the competitors that we see on this chart along with NVIDIA. NVIDIA is the main blue one here, which is insane, right? We have 17,774%, okay, of return to investors over the last 10 years, right? So from May 24 to 2014 all the way to May 24, 2024, 10-year gap, we can see NVIDIA blows competition out the water, right? The person in AMD is next on here, and that's 5,817%. Now, don't be fooled. 5,817% is insane. That's a lot. That's incredible. NVIDIA is just so good that it makes these other incredible companies look like they're not as good, right? And then we have we have Broadcom, and then Qualcomm is last on here with 200% return. And so when you compare NVIDIA stock price to competition, NVIDIA blows it out the water. And then when we compare NVIDIA to the benchmark, meaning, the S&P 500, right? So GSPC that's the S&P 500. And then IXIC here is the NASDAQ composite. And then is NASDAQ. And then we have DJI is Dow Jones, right? And so when you look at the chart, the far right, again, 17,755% return for NVIDIA. But you look at the benchmarks, right? They're barely scratching 200% over that same time frame, which is insane, okay? Ignore the Ds that you see in the chart. That is really just the dividend dates, like the dates throughout that time frame that dividends were paid out. But it's easy to understand and see why NVIDIA's stock price is as high as it is, of $1,044 and change at this moment as I'm recording this episode, is because financially they're the best. I mean, across the board, they're just the best. Literally, nobody's even touching them right now. They are cooking the game. They are cooking the market. That's why the entire stock market is riding heavy on what NVIDIA does, because they are the poster child of where technology is going, number one, where AI is going, the infrastructure for AI, and then also just how the economy is really kind of moving and doing. It's such a big indicator, because technically it's like if NVIDIA ends up doing bad, then that means all the other companies are actually doing worse. You know what I mean? So yeah, so that's a little bit of technical analysis in terms of NVIDIA stock price over the years, over the 10-year period, and then versus competition, and NVIDIA stock price versus benchmark over that same 10-year period. Let's move on to my technical rating, right? So from technical perspective, NVIDIA versus competition, we just saw that, right? NVIDIA is far outperforming everybody in this competition over the last 10 years. It has the best growth story, best fundamentals, and technicals across competition. So I give it, obviously, a huge green flag. Versus major benchmarks, the gap with those indices are also even much bigger than what it was with competition, right? So insane. Overall returns for investors blows the market return out of the sea, not even the water, right? So final rating for technicals on NVIDIA is 5 out of 5. And that brings us into our last slide. And just because it's 5 out of 5, or I'm rating it 5 out of 5, again, big disclaimer, it doesn't mean simply just go and buy it. Always do additional homework and additional research. I wanted to provide everybody in the audience and the followers something simple, easy to digest, get a good understanding of NVIDIA without all the noise, all the mess that's going on right now. So yeah, that brings us to the end and conclusion of this video. If you enjoyed it, learned a thing or two, or any other stocks you want me to do research on, definitely leave it in a comment. If you have any additional thoughts about this video or just what you think about NVIDIA, feel free to share it in the comment. Give us a thumbs up so more people can see the video and enjoy it as well, and so they can learn a thing or two. If you haven't already, make sure you subscribe to the channel, right? We're dropping videos, so make sure you subscribe to the channel and turn your notification bell on, so anytime I drop a new video, whether it's a stock research or I'm speaking on specific areas within the stock market, money management, right? How to budget and everything of that nature, you do not miss out on that quality, high level information. You can also follow us on Instagram, Twitter. If you have a Robinhood account or you don't and you want to get involved in investing, you can certainly do so, and you can join through my link here. I'll have all these links in the caption of this video when it's uploaded. And you can follow us on Facebook, Instagram. We have plenty of financial literacy, free content, free information, market updates, things that are happening live, and also things that will help you on your personal finance journey. So without further ado, thank you for watching all the way through with my first stock research episode on YouTube. I'm excited to do more of these and bring you guys, more higher level insight into what's going on around the world, what these companies are doing. So we just wrapped up on NVIDIA. Stay tycoon, stay investing, keep learning about the stock market, keep learning about these companies, because the truth of the matter is our future and our income and our well-being financially depends on them. So until next time, I'll see you in the next episode. All right, stay tycoon. Cheers.